Daddy Mac. Dan's 30 years got our way, trading life and markets every day. Rusty's chained to the mines, digging deep day by day. But when Option Omega releases new features, he's free to come out and play. Option Omega, you're trading home, where every move makes you feel less alone.
Guys, how are we doing this Friday morning?
Better than the futures, better than the market.
Love it.
Good one.
Love it.
Another day in paradise. Isn't that what Jimmy Buffett would say? Or
that's right. That's right. Yeah. Yesterday felt that it was a down move, adjusting. This morning feels like a little bit of fear starting to.
It is
starting to get in there a little bit.
Kind of like the analogy kind of is, if you're a roller coaster person, you may not like this, but if you're not a roller coaster person like me and your kids take you on roller coasters, that's like when you go to the first roller coaster drop and you're like, oh, that wasn't so bad. I think I'm through it now. The futures now feel like you're up about to do the second drop and you're like, oh no, is there a loop on this wooden coaster? Is that even possible? So right. At a 40 VIX, that feels like the coaster's at the peak of the next loop here.
Yes, I think it's we had some calm, right? VIX 26, 27 seemed like that what it was March 13th.
Right.
SPX around 5,500 or whatever. And then now it's getting to that next level. And now you throw in, to me, if you want to throw in the hot sauce, it's called the weekend, right? Now you get the weekend and say, do you, young man, want to go long over the weekend? And so this brings a whole dynamic to create even more panic today. But as you said, as Troy was mentioning, it could go either way. We could go down. I mean, you actually could rally some today. Yesterday wasn't much of a rally. Right? Coming back at all. No. Today could have some, rally. But again, with that Friday, with that the weekend thing is really throwing the hot sauce on the food today. That could exasperate things and get the VIX. What are you saying, Troy? It's like 40, 45 VIX.
I think the high this morning was 45.
Okay.
At like 7:30, 7:40.
Wow.
Yeah, to me, it feels like we could definitely rally. The moves right now are wild, and I think like if you're new to options trading, this is a beautiful like tornado that you see it in textbooks.
Yeah,
but you're seeing it where we're 60 points off the lows this morning. You think about a 60-point day, like whoa, futures exploded today, or the market exploded. We're up 60. We're up 60 in the last hour. And vol's not really coming down because we could be down 120 in the next hour. That's like the land that we live in. And I remember saying, like, I remember during COVID, by like day 12, your just mind is numb to it. And you're like, oh, 200-point swing. Oh, here we go. Another 300-point swing. Just huge.
Well, huge. And you almost can't trade it at times because it's so fast.
Yeah.
And it's like, okay, I'm thinking of getting a little bit of long deltas here. And next thing you go in and we're up 50.
Yeah.
It's just the speed of these, what do you call it? The minute candles or whatever.
Yeah.
It's like you almost have to, if you want to get a little bit short deltas, sell into strength, or if you want to get a few long deltas at some point, buy it, because it is, once it turns, it's the speed is amazing, and execution, again, unless you have a clear plan or you have something on, boy, that's my biggest concern for people, is just you could give up quite a bit on if you're off on your price. on a day like today. But it's
Yeah.
it's a great, you want to embrace it in the sense of, I'm not saying embrace it by going in and putting positions on if you don't know what they're doing, but at least even a paper, if you're newer, paper trade or something, just watch how these things are working, right?
Yeah.
And just so you can at least see in a high vol environment. And again, these are more anomalies, right? They're not, over a 5-10 year period. You don't see them often. I know when you're in it, people think, well, it's going to be this way for the next year and a half. I guarantee it won't. You know why? The markets can't handle it. The brokerage firms wouldn't be able to handle it.
Yeah.
Human beings wouldn't be able to handle it. So it won't. But when you're in it, it seems like it is very stressful. So, but I think if it points you towards trading with a plan, trading with a purpose, otherwise, it's insane, right? In terms of the movement, the execution and stuff.
I agree. And I think it's, I think it's just the most beautiful thing in the world, but I'm a weirdo. That's the, what I will say to Dan's point, I'm going to sneeze here, incoming sneeze at any moment. I've got the mute. To Dan's point, I remember during 2018 Volmageddon, I would take screenshots of the IV of SPX.
Oh yeah. Bless you.
Did it. Because I did this during COVID, and I've showed this in Option Omega before as an example. People literally don't believe you if you say this option price IV can go to 250.
Oh yeah, they don't believe it. Right.
They'll say that's not true. And particularly people with a disposition towards selling options don't like to. That's the boogeyman.
Yeah.
But IV can go to 250. It can go
a lot higher than that on meme stocks.
That's right.
Yes. Yeah.
That's right. Yeah, that's the index. And so it's a good, today's a good day. You probably don't have long because Vol will probably end up with a VIX 20 by 4 p.m. today. But if you take some screenshots, you'll appreciate it later. It's a very good learning lesson.
And Troy, not just screenshots particularly, I think if you want to learn about term structure of volatility, because most of the time we're in this, what's the I always think of the Latin dance, the Contango, or we're in this volatility environment. The Contango, or whatever it is. We're in a certain volatility environment. So if you're going to take a screenshot today, take 3-4 different months, because you want to get the term structure and see how these things are trading. Look at a calendar trade. Look at like in the Options Omega community, a lot of double calendars. This would be a good day to look at. Okay, on a shorter, take a shorter term. I'm going to sell a 1 day by a 4 day or whatever, by a 3, something shorter term. And then just so you can see the term structure, go out and look at a double calendar where you're 15 days out by 20 days. And you're going to see a totally different term structure. And I think there's some good learning here. And the main reason there's good learning, like Troy says, this will not last as long as, you're used to the last 10 years, a certain volatility term structure. And I just want to say the word Contango again, because it's a cool word. Have you ever, are either of you dancers? Do you know how to do the Contango, or isn't that?
I was president of the ballroom dancing.
No, you weren't.
And
are you serious?
100%.
You're serious.
I was the co-founder in my high school.
That is wonderful. Troy, your job is to get pictures of the early Matt cruising around the ballroom. I love it.
There might be one in the yearbook somewhere.
I think that's wonderful. Yeah.
Well, that's definitely going into the theme song.
The theme song. See, Matt, you shouldn't have admitted that in public. Matt will be dancing on the.
Nah, I did it.
Blues.
I did it because it was 80% females.
Sure.
Well, that's the secret. I was the guy that was like, these losers over here. Look at them, and like they're dating. They've got girlfriends all the time, and I'm just sitting there.
That's funny.
Anyway, listen. Today's one of those days. I'm going to be honest. We're going to show a test that we've been working on all week, the McRib, but and take this as a testament, I think, to the quality of the show. We all trade. We're actual traders. And so we're not just talking shop. So Papa's got some stuff to do this morning, trading wise, that I've got to get done pretty early in the session. So, but I will say this, what do you guys, Dan, I mean, to someone who doesn't have powder in the keg at all right now, I mean, they have dry powder. They're maybe been trading options a little while, never traded this environment, but they like it. They want to dip their toes in it. They're not afraid to. What would you tell someone like that? And what would you suggest?
To dip their toes.
To dip their toes into the tornado.
Yeah, right in the middle of a tornado or a gang fight, depending on what part of the country you're at. I mean, from a learning, I would, again, go back to put on many paper trades today to get used to the volatility, because it's the volatility structure. Because again, I mean, there's two big principles going on. There's two big things to focus on. How do you lose money on a day like today, right? You basically lose money on any day, right? Delta or volatility are really your things. And delta is, if your long delta's on the way down, it's not good. If your short delta's on the way up, that's not good either. So I think focusing on this, if you paper trade some strategies, like some of your range bound type trades, calendars, double calendars, butterflies, and see how the deltas move up and down, because that's really how you lose money. And that's why I think in the world of risk management, which is what Options Omega specializes in terms of, their risk management word is just a little different. Their risk management is, wouldn't you agree, guys? Rails, right? Which putting rails on trades, that's everything. And when you think of the strategy that we were talking about today, the what's this thing? The 0-day rib, that would have been good all week. Obviously, the reverse iron butterfly, the McRib, this was a good week for it, right? Because you want movement. But going back real quick to Troy's thought, if someone wanted to do a trade, right, just to dip their toes in the water, I would go to SPY, right, versus SPX because it's cheaper, and do a defined risk if you wanted to, something like, because the volatility is high, I wouldn't buy a call or put, but take a direction, whether it be up or down, whatever you want, do a, 1 or 2 wide, either a put vertical debit spread if you think we're going down, a call vertical debit spread if you think you're going up. Whereas at least in a vertical spread, a vertical debit spread, your risk is what you pay. So if you pay $100,
that's right.
That's it. So at least on a day like today, a defined risk spread, right?
That's right.
And in the form of a vertical, so if it's in the calls, you're going to buy a strike, sell a strike in the SPY 1 or 2 points up. If it's a put vertical debit spread, buy a strike, sell a strike 1 or 2 points down. You got $100 at risk, right? And you can watch that, at least that would be, I'm thinking, what's the most harmless way to get involved in the market and have a risk of maybe $100 or less, right? When you say, or the other thing is for newer people, I'll tell you what's interesting is if you look at the sectors in the SPX, what is it, 9 sectors or 11 different sectors? But what I like about those, have you guys ever played those to different sectors?
Like the broad, like consumer discretionary.
Yeah, like XLP, XLR.
There's ETFs for all of those. So doing, a long XLE play and then pairing that with maybe a short XLF or whatever in a spread format. Is that what you're about?
Because here's the thing. What I like about those, for whether you want to do a poor man's covered right or you want to buy a call, whatever you want. I wouldn't buy a call, I'd buy a spread. What I like about it is XLF, $47 is the stock. XLE, 86.
Yeah.
XLP, 82. XLU, which is your utilities. So that's going to be your least volatile, generally $78. So I think those are wonderful things, again, for beginners. SPY, little vertical spreads for direction, or go into some of these ETFs that are under $100, you could participate in the market for $100, $200, and that would be it. But to go in there and just naked buy a call in something, or sell a call naked or put, no, you should be arrested, right? Especially if you're a beginner. You want to experience. It's like you want to experience it's like going into a bad neighborhood in Chicago, but you don't want to. It's like people go on safaris, right, in Africa, and I think that sounds cool as long as I'm in a caged.
Some rails, right?
Some rails,
some rails.
Right. Some risk management. I have some rails, but you see these guys are, if they go in something without the rails, the lions are hungry, they could eat you. So I think, there's ways to participate in this, because you're right, Troy. It is. If you said to me, well, wouldn't it be better to just stay out of the market? Well, if you said to me for $100 or something, I could learn, right, in this environment. The learning experience to me is much more than $100. And so I'm not encouraging everybody to go in and place money on this, but I'm just saying these are ways in SPY in the sectors. If you're using vertical debit spreads, very cheap, you at least know your risk. So it's at least, anyways, just guidelines.
It's great advice. It's great advice to get started. You get to play. You don't have to automatically put the house up for mortgage.
That's right.
Something else to remember, and I think everybody watching this probably knows this, at least watching this live, but when you have a trade, as Dan is talking about, the thing with the spread, if you have a long call debit spread and you're long an option closer to the money and short an option farther away, you know exactly how much you can lose. That's a debit spread, right? Yeah. Well, there are people who trade credit spreads as well and may have a stop loss on them. And in a market like this, again, this is a basic thing, but some people may not know. The risk of your spread is the width of your spread. It's not what your stop loss is. Yeah. Because when you have, as Troy said, when you have a 120 point or a 60 point move in a couple minutes pre-market, you can get very, very rapid changes. You do get very rapid changes in the options pricing. So if you are selling a credit spread, your risk is not your stop loss. Your risk is the spread width.
Yeah.
Speaking of stop loss, though, before we get to stop loss, I want to show the final McRib in its
final
form. Well, but hold on, I do want to ask. I mean, Matt is one of the more, Option Omega is coming out with an automation platform, and you test a back test, you trade a back test. It's pretty powerful. Yes. Matt, do you have any automated trades that you're trading this morning that are not going to hit because of the VIX and are going to hit because of the VIX?
Not because of the VIX, but I have I think my whole slate has this morning. I'd have to look, but off the top of my head, I think actually I do have some that won't hit because of the VIX, and then also some that won't hit with. I have some rails on for SMAs and RSIs that are just to take out the extremes, and they usually don't have an impact, but today they will. So yesterday was a pretty quiet day. The platform closed all the trades I had open, I think, except for one or two. So actually pretty quiet, and the best week for the kind of double calendars that I do in a long time. I don't know since when. It's been a while, but yeah.
And maybe say one word on that, if it'd be good. You would think, most people are, might think, okay, doing double calendars when the vol's low or something. But when you look at double calendars and calendars, why are they so good in an environment like this? What makes sense? Yeah.
Yeah. So just a word about that. And I think what you said at the beginning is actually super important. Like, a double calendar is simply a trade structure. And I think traditionally for a long time, Dan, people did them at higher delta, closer to the money, right? Is almost functions like a condor. A lot of the ones that folks do now are a lot lower delta or farther out of the money. Yeah. So in this particular situation, when VIX is high, because it's a trade where you're buying a farther expiration, if you're farther expiration goes up in value a lot, that's helpful if vol is sticky, if VIX is sticky. And so it was just the way the market moved. We were actually at the call strike of a couple of my DCs, and then we had this 3% move. You think, oh, that DC is going to get blown out. Well, the tent was so wide, it literally went from the call strike to opening at the put strike. And then as we continued to drop, the platform took them all off with an exit because of various Delta rail exits.
And that's a great point yesterday, because it's like, because of the move the day before,
yeah,
a lot of trades were a little bit short Delta because we had been going up a bit. So they weren't like necessarily in the middle, whether it be double calendars or iron condor. So when the market came down, none of them really got hurt, right?
Well, depending on the Delta, but I would say, yeah, in broad strokes for sure. And it was a really interesting week because there were trades that people put on Monday and Tuesday, and they were up 20, 30, 40, 50% within a day. And when you backtest that, like there was one that I backtested in 400 instances, this type of profit in this amount of time had happened like twice. So like just really unusual circumstances.
Well, and when you look at, and that's another, back to the learning, what you guys were talking about, learning on a day like today is, I don't remember many instances that I've seen where you could be the last month even, right? For the most part, have a trade like, let's say, a calendar or double calendar, a mixed month spread, where you're buying, maybe you're setting your legs at a 15, 20 Delta, whatever, way out of the money. And I don't think people realize, I'm used to doing calendars or double calendars. You might get 60 points on the upside or downside. Here, you've got from here to New Zealand, right? You've got, because a 20 Delta when the VIX is 30 is different when a 20 Delta when the VIX is 17. And so I can't even imagine, Matt, what are the break evens? I want to ask you, and then just a quick comment, just so people can get the other side of the coin. But what are the break evens if you're doing like yesterday? If you had a double calendar on your break evens, because with a 20 Delta. But before you answer that, I do want to say, for people on the other side of the coin, there is something, so you don't everybody jump in and do a 20 Delta double calendar today with VIX at 40. Right. If volatility comes down, that also can change your life, because remember, as the volatility comes down, it pushes your break evens in a lot, and it also destroys the roof, right? Your profit target comes down also, so it can change. But what were break evens on a double?
Yeah, I mean, I think and the ones yesterday, I didn't exit for much profit, but they were maybe 50, 60, 80 points in the money. We should do a whole show on how the VIX structure and the vol structure and the timing of that is really important, because yesterday was that they were all 0 day on the short end. So we could talk about that for a while.
Yeah.
But they were the answers. I mean, a wide VIX, a big VIX gives you a lot more room.
It's captivating. You could look at these break evens and say, how in the world could I possibly lose?
And that's why that's why double calendars are tricky to model, which I think is going to be a whole week on the OO show, modeling double calendars.
Oh,
so,
yeah.
Troy, do you want to show the final boss?
Yeah, I do.
McRib here. All right.
I do want to show that. Give me 1 second. I just realized I wasn't sharing my screen at all. All right. Here's yesterday's McRib. And what we had done is we filtered out Mondays and Fridays. By filtering out Mondays and Fridays, this type of trade, and we've talked about this in previous sessions, Thursdays seem to just move. The market seems to move a little bit more. If you do Tuesday, Wednesday, Thursday, it improved the trade. Drum roll, please. We need to add some rails to this, as Dan just said. And actually adding rails to this is going to help. And with that, I give you the final McRib.
Interesting.
getting it up to a 3.8 MAR since SPX dailies, and just put it in chat for those who want to follow along at home who are Option Omega subscribers. We added two things, really one thing in two different ways. Actually, the same way. Matt, take it from here. What does a stop loss of $12 mean? And what does intraminute stop loss mean?
Yeah, so stop loss of $12 is just like if you are looking in a broker, $12 stop loss in OO is the same way as it is in a broker. So this is checking to see if your debit went down by $12, and it's doing on an intra-minute, it's doing on an intra-minute databases. So the frequency, the data resolution is actually more specific than just 1 minute checks, which is what backtest normally is. So this is a pretty high resolution backtest, and it has slippage on it. So when the stop loss is hit, the backtest is also adding slippage to it. So this is a very punished backtest. So, and I have to admit, Troy, I don't know that I've seen a lot of IMSL inverse condors. I love it. I'm gonna have to look at this one a little bit. So
what's IMSL?
Intermittent stop loss.
Oh,
yeah.
I get you.
So it's checking the highs and lows to see if you would have got stopped out at the intraminute. And so it's gonna have more stops than the standard 1 minute check, which is only checking the backtest once per minute. So, and so what did we do on this? We took our max loser down. There you can see there's still a max loser. We're not capping the losses. So it's got IMSL plus slippage. So you can still get, healthy losers. But if you scroll down, Troy, a lot of the losers are going to be around the $12 to $13 mark, while still at the same time, your winners, there's no profit target. So your winners can go all the way to the edge.
And that's what a good rail should do. The rail shouldn't, in a perfect world, the rail should limit your losses and help your gains be bigger. And that's the trade-off of it. Now, when we first started, we had 700 trades on. This is a really filtered down trade.
Yep.
But to the point, if you look at the way you put these things on, do you want to basically buy a straddle every day?
Right.
No, you don't want to buy a straddle every day.
That's right. And like today's example, when you guys asked, are there any trades I have that won't go on? I have an inverse condor on Fridays, and it definitely won't go on because it requires the VIX move down. VIX is obviously not down today. And so
it's not down 0.01 points.
Right. And so the point is, if you price out what this condor is today, I mean, it's the risk reward on it's going to be horrible. Because vol is so expensive, and I don't know if I can do it here real quick, but it would be bad. So that's why it's filtered out.
Yeah. And that's why, you think about it. This is a negative theta trade, right? It's got a win percentage of 51.9. How do you get it to work, right? And the key with these is you have to, like you did, you're playing certain days, certain events. But really, what's genius here is the fact that you're looking at a spec trade. You want movement. I mean, the rails that Troy put in here is basically the cost of a typical McRib here. If you look at the trade log, was $30 or $35. The stop loss is $12. So you have basically a 40% max loss, right? 40 times, if you pay $30, 40 times 30 would be 1,200. That's the stop loss, right? So you have if I'm right on that, so you have about a 40% max loss. But what's genius is you're letting the winners go. So even though you might have, you say, well, 40% max loss, you've had winners that dwarf that, right? That's how it wins. The fact that you have 189 trades and you have only 98 winners. I mean, let's look at some of the winners, Troy and Matt. Don't you?
Yeah.
Have, I mean, you have some.
So you have $28 to $47. I mean, that's a nice one. And then when you're capping, when you're not capping, when you're taking off a stop loss, it's around $12 to $15. You're always preserving some of the capital in the back test, and that's why the MAR reflects that. So your average loser is going to go down, even though you're going to lose more frequently, because you have a rail on it. And then you have days when you have how many days in a row, if you stop right there, this is sequence of return risk, both directions. So you have times when you may have 4 or 5 winners in a row, and that allows a lot of $12 to $15 losers.
Yeah, sure. That's a solid plan for a spec trade. And
I'll and shout out Steven in the chat. If you include Fridays in this test, if you put Fridays back in, it actually goes up to 4.4. This is why we share the tests. So you guys, no doubt, we say this every time. No doubt, there are better ways to do that. I mean, this is a great trade. I mean, to be honest, this is a pretty good MAR. And you could definitely get it better. And it's always that balancing act between over filtering and under filtering.
Yeah.
Over curve fitting and under curve fitting. So play around with it, guys. I put it in the chat. If you're like, I can't access it, optionomega.com, sign up. You can test to your heart's delight. This is basically 1 minute data going back to 2013 and test intraminute.
Hey, Troy, real quick. I know we're late and I apologize. If you look at, do you have on there yesterday's? I mean, just so someone could get their arms around it and wrestle.
Well, yesterday wouldn't hit because of the VIX.
Oh yeah, that's right. The VIX.
Yeah, you're not trading this right now.
One comment, which is great because you don't want to buy it on a high VIX.
Right.
You don't want to pay up volatility. So how important that parameter is, you want to buy a long Vega trade on a day where the vol's down a little bit. So
that's right.
Anyway,
that's right. Well, guys, listen, speaking of modeling out calendars, I've got some
stuff to do.
I've got some calendars that are where you're long the front month and short the back month. And if you think regular calendars are tricky to model out, these babies are a different thing. So
reverse calendar, short time spreads, we would call them in the pit.
Yeah. Short time spreads. I keep I call them Troy's little cigarettes. That's my little trade, the Troy little cigarette trade.
Cigarettes.
Yeah. All right. Guys, have a great weekend. Stay safe out there. Remember, if you don't want to carry risk into the weekend, probably there's a lot of people like that. So trade accordingly today. It'll be a fun day. So have a good day. We'll be back
Have a good
Monday.
one. Happy Friday.
Thanks, everybody.
We'll talk Monday to talk about strategies when VIX is over 180.
Yeah.
So see you guys soon.
All right.